Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, you know the government data is all false when they come out with these jobs numbers and everything like that. That's not really the story here. The story is what the picture is painting for us, and it's really important that you guys watch this video because we got some pretty important information to show you in regards to historically what this has done to the market and the economy. You're not going to want to miss this. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code PODCAST for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob. So, a lot of talk with the Fed, we got CPI tomorrow, how does that affect what the Fed's going to do? And then you got government jobs data and other economic data that, you can't really take at face value, right? So what are we supposed to look at here, Bob, to kind of give us the tell on what's going to happen?
Gosh, well, if you just look at energy and food today, the Fed's got to be shaking in their boots here if they think they're going to pause or cut here with no impact. And I think that's kind of the theme today. So there's a lot of talk about, soft landing, hard landing, right? And the narrative from Wall Street has been soft landing, soft landing, soft landing. However, the Fed only has one more rate meeting to engineer a soft landing in terms of how they manage the rates. And so this chart here shows you all the times where a soft landing was engineered. And typically, if you want to engineer a soft landing, is you got to go from your peak rate and you got to start dive bombing the rates down to inject liquidity and or take the pain of higher interest rates away from the economy. The problem we have now, Phil, is that I don't know if we showed so many charts, I forget sometimes. We have to show this chart. Maybe we can show it tomorrow as an aside. But between now and January, the CPI is going to be rising month over month, and the Fed is going to. There's no way the Fed's going to say we're going to cut into a rising CPI environment,
right? Which
almost guarantees a hard landing, from at least from the Fed action. But we're not done yet, Phil. I mean, the data is screaming that they're too late. And the next chart we want to show you guys is small business optimism. This is another one of those that when you get it, 100% recession bound. Well, we nailed it again. They try to give us a false dawn this time though, Phil, saying, hey, everything's okay. This move from March to September, I call a false dawn, which means that they try to make it sound like, hey, the worst is behind us. We're moving up. But man, as soon as August hit, the wheels started coming off the apple cart again, and also economically and the stock market.
Right.
And the reason being, and I'll throw this back to you after this, is that because they've been lying to us, of course. And this next chart shows you how they lie. They don't call it lying. Can you imagine if you were a kid, Phil, and said, Mom, I didn't eat the cookies. I just revised down how many were in the jar,
That's a great analogy.
So this is what they're doing again. And this one here, 2008, they did the same crap, and they're starting to revise down again. And because they made assumptions in the birth-death model, you and I knew, they're just trying to make us look stupid for 6 months, and we just knew they were lying. And now it's starting to capture down.
Right.
And so now you have, and small business. The reason why I picked that chart, Phil, is that small businesses in the country is the engine. You forget large business and mid business. I was in the payroll business. 96% of all companies in the United States have less than 100 employees, and out of that, 90% more of them have less than 4 employees. So this country runs on small business.
Right.
And if they're starting to wiggle here, they retrench. Okay. And they don't invest, and it ripples through. I mean, it ripples through the supply chains. It ripples through what I call small businesses are very, very charitable in their giving. They're the ones that support all the little league teams, right? They're the ones that they're the fastest to come out when economic environment is good. They're just very, 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 very sensitive, and they're collapsing. And we have an indifferent government to their plight. And they're the ones that are most at risk of higher energy price and higher input costs because they don't have the financial backing, or they don't have the reserves. Because a lot of these people basically live off their businesses, and you have a couple bad months, it puts the business in a hole. So I just think they missed it, Phil. I think Powell was really, really trying to engineer a soft landing. He would have paused in June, and he would already started reducing rates. And I think it's a hard landing is a foregone conclusion.
Yeah, I would tend to agree. And I think the chart here on the NFP, so what this is 7 consecutive and negative NFP report downward revision. So last time we saw this was in 2008. Obviously, that year would have been a great year to start prepping for a big short. And, there was a movie called that made about that time period. So, it's not good that we're doing that. And, obviously the revisions downward, the size of them matters a lot. So if we get a big push down in the next couple of reports, that's something to take notice of, I think, because like you said, the wheels are coming off the Apple cart. And in the Apple cart, we'd be remiss not to mention that Apple had their event day today, and it was largely met by bearish price action. Market ran up into that event and sold off. Why did it sell off? Well, I don't think we're seeing what the market has been pricing in for Apple in the last few years, which is innovation and consumer demand. And what they told us today was we really aren't innovating. The small upgrades and things like that, it's got a titanium case and this and that, but where's the big innovations? Oh, AI is going to better recognize your voice out of the noise. Well, that's not even on the phone. That's relayed back to their cloud. So where's the hardware innovation? And then they also were lower in the retail price than was expected by analysts. So that tells you that, and they've got all the smart people in the room, that tells you that the consumer demand is dropping. And we're seeing it too. Places like Costco have never ending now discounts on Apple. You only used to see that toward the end of the year into Black Friday, possibly into Christmas. And now they have a carousel of revolving discounts amongst the different products that they sell. So obviously there's a drop in consumer demand. So I think, you have to kind of take, as we were mentioning in the VIP room today, you kind of have to take all the pieces, right? And at some point, it all matters a lot. It happens slowly and then suddenly. And I think that's what's happening here. So while we can enjoy the market at over 4,500 here, the fact that it's not just rocketing higher like the big bulls think it should, or the big tech bulls think it should, I think is a warning signal. So like I said, you have to take it all into consideration. I joked and said Apple should probably cancel their events for a couple of years and come back when they have holographic displays, because I think that's really, you joke about that, but really that's what the market is looking for. Another innovative cycle, and we're just not seeing it here. Plus we're having underlying issues with the jobs numbers, and that has historically been a very ominous sign for the market.
Yeah, it's funny. I was actually thinking about that today too, because I came from corporate America, and innovation dies when you get to an end of a stock cycle, because the executives are so worried about not making the analyst estimates that they tend to become more and more risk averse. Mm-hmm. And you end up just not wowing the customer, and on top of that, the customer can't really afford your product set. And also another side too, because I noticed I was reading the comments, people talking about we give it updates kind of where we are and where we live, and I just want to throw another California one at you. So my daughter is about ready to fly the coop, with a couple friends. They where I live is really more very residential, it's beachy, and where my daughter works is more central Orange County, and they're the commute's starting to get to them, and they all the 3 girls work up in that area. They've been looking for condos to rent, and it's been really hard up until last month. And then all of a sudden now, because they don't want kids, right, to rent their places. Now all of a sudden they're like, yeah, come by, give an application, come on in, and prices are starting to come down off the ask. I thought I'd throw that at the audience here. I was really surprised, and we're starting to see softening here in the rental markets here a little bit. Now, albeit it's still pretty pricey out here. But I thought I'd share that with people. And I know people are asking about Hawaii too, Phil. Do you want to kind of give a thumbnail? Because, you're very interesting. For people that don't know Phil, Phil and I both trade, and we trade together, and we have Trade Genius together. But I came from financial software background. Phil came from actually construction. And before that, he was in technology as an ISP owner. And so he has a good insight as to kind of the environment in Hawaii. And maybe we could spend a couple minutes talking about that, Phil. I think people find that really interesting.
Yeah, it's a resort destination, right? And you do have some agricultural, but largely, tourism, construction are big drivers of the economy. Has construction really slowed down yet? I don't think so. We haven't really seen, at least the people that I talk to, we haven't seen a big slowdown yet. Although that typically, in the way it works in Hawaii, is it's boom bust. So it'll be like all of a sudden everyone's going to be talking about how jobs were canceled. They don't have anything booking for the next few months. So that I'm expecting, or at least I think we might hear that coming down the pipe. Tourism has been slower. Obviously Maui going through the wildfires, it's a total disaster, train wreck over there. They've got, I think, 15,000 rental cars or something like that sitting on the lots in near the airport, and they're talking about shipping them back out. It's almost like COVID all over again over there. So, Maui's economy is just totally wrecked right now, which is going to hurt the numbers. And so with that being said, you would look for spillover effects to the other islands, Kauai, Oahu, where Oahu, if you're not familiar, is where the capital is, Honolulu, or Big Island. And be honest, I don't think those islands are really seeing a huge surge. So I think people by and large are canceling. So I think we're seeing the beginnings of a slowdown over here. And why Hawaii matters is because that's where your extra spending is happening, right? And so if you look at things like discretionary expenses, that's the stuff that, what's Hawaii doing is a big clue in why that matters. So I think we're just starting to see it. And I think, it kind of jives what we're seeing with the underlying data. Now, that being said, we're in a weird spot because, kind of getting away from that a little bit, the 1% is making a ton of money with money market funds at 5%. And that usually fuels services. So, like you've mentioned before in other podcasts, Bob, getting your hair done and just, some of the other stuff. So we do have that going on. And I think where that might get a little bit tougher is when Yellen is finally forced to stop doling out these T-bills, because T-bills, like we mentioned, are liquid. They're like money. So it's literally like a form of QE. And she's running out of rope on that because the government can't afford to fund T-bills. There's too quick of a turnaround there, and interest payments aren't sustainable. So now they're tapping her on the shoulder and saying, hey, you're gonna have to start doling out a lot more 10-year and 20-year and 30-year debt. When that happens, that locks up a lot of liquidity. So even though we have high interest rates, that actually ends up sucking all of that up, because you have people going to the debt window saying, hey, we got to buy debt. Like China, right? Surplus economies. We got to buy debt. If all they're selling you is short-term 3-month, 6-month, 12-month notes, that gets regurgitated back into the economy rather quickly. But when we're dealing with longer-term 10-year plus debt, that isn't the case. So that's really what I think is going to be the driver, Bob, in slowing down some of the spending, getting the liquidity out of the system, and why I think we're going to see continued drawdown in the M2 change, right? The money supply change, I think, continues to come down. I think we're only like a third of the way down from the peak from the COVID boost in that. And that's why we still have a lot of, liquidity sloshing around in the system, why the stock market can move around the way that it is. But I think, like, you zoom out, and you've mentioned, where have we gone really in the last 18 months in the market? Nowhere, right? So there's not an acceleration, in my opinion, of liquidity. It's slowly coming out of the system. And when you zoom out, I think that's readily apparent.
No, I really appreciate that, Phil. And it's interesting. I think this week we're gonna do a podcast on Bitcoin, and then or Bitcoin altcoin. I think Phil needs to give an update on that. Mm-hmm. And also too, Phil and I were talking because we're kind of macro bearish, and we're going to be flipping stock market to bearish here. But we also want to just talk about what if we're wrong. And I thought we kind of share some contrary conversations going on out there that may prove us wrong, and you see some sort of acceleration. So stay tuned for those videos this week. I think they're really interesting. It's good for us as traders to take take the other side sometimes so you don't get patting yourself on the back before a baseball bat hits you upside the head. And I thought we'd share that stuff with you too. So, with that, I'm going to let you guys go. Thanks, Phil. You guys hit like, hit subscribe. I really appreciate the comments. Tell us what you want to see. We're doing this for you guys. And then you could do us a favor by liking it, telling your friends, and even joining the service. We'll throw some attaboys at you. We're really helping people make really good money here, even in this environment that is just really bewildering to most people. So once again, thanks, Phil. Have a great day.
Trade Genius.